Welcome back to the Commercial Real Estate Show. I'm Michael Bull. But today we're talking about the U.S. office market. Now we're going to focus in on investment property sales. You know, we talked about the rental rates are increasing. There's been a lack of new construction. So is it a good time to buy? We also have interest rates that are starting to climb. Should you be considering selling? Well, we're going to look at cap rates and trends there with Walter Page from CoStar. And Walter, so is there a lot of movement? It seems like there's some people that say, you know what, if you're going to sell, do it now. But you know, from the indications you're giving us, you know, times are pretty good to buy as well. What do you see for volume?
Volume is off the charts. We hit $145 billion of sales for 2015. That number was up 13% from the year before. And just to put this in perspective, in 2010, we were at roughly one-third that number. So the volume numbers are nearly 3 times higher than they were in 2010. So obviously buyers and sellers are coming to an agreement, and liquidity in the office market and all real estate is exceptional. And this is capital. You know, we have big pension plans that are increasing their allocations to real estate. We have foreign investors coming to the marketplace, and we have just private investors also all coming to the marketplace. So it's a pretty flush time for commercial real estate, especially office.
Right. Yeah, we see the same thing. You know, we're licensed in 9 states, headquartered here in Atlanta. We're starting to see a lot more activity in some of these secondary markets, which some people consider Atlanta as a secondary market. And you mentioned foreign investors. So how much of an impact are you really seeing there?
So it's hard to track foreign investors, but we estimate that they're over 10% of the market. And to give a perspective of this, I just pulled down some information on the top 20 property sales in the United States, and 4 of the top 20 were foreign investors. We had a Canadian investor, we had a Norwegian investor, and a China investor in that top list. And these people are buying some pretty name-brand buildings. You know, one of them was a $2.2 billion office building in New York. And then, you know, you go down, we have a $630 million building in New York and another $600 million building in New York. So they're buying some pretty name brand assets.
Yeah, well, it's interesting to see the impact of these foreign investors as they look for the U.S. as kind of a safe haven, and of course commercial real estate being a nice hard asset. So this kind of volume, this kind of interest, what's it doing to cap rates?
So cap rates have compressed in the past year, not compressing as fast as what they have been. They were down about 20 basis points in the past year. And we think that the cap rates are probably, well, let's put it this way. We think that the market still has a lot of pent-up capital. And so despite seeing some interest rate increases in the 10-year Treasury, in the federal funds rate, our expectations are that cap rates will probably continue to remain very low for the foreseeable future.
Interesting. So could you give us some example cap rates? I think some of our listeners may be surprised how low some of these cap rates are, and then maybe as well as some high on some properties. What do you see?
So the lowest cap rates for office are concentrated to San Francisco and New York. In those markets, it would be very common to have cap rates as low as 4%, which is, you know, and that's for, you know, top tier assets and things like that. Now, part of the reason why the cap rates are so low in San Francisco in particular is that San Francisco's had over 80% cumulative growth in rents. So there's a lot of embedded rent growth. which means that people have growth when those leases renew. On the other hand, we have more normal cap rates across the country are closer to 6% in most institutional markets. And then if you go spread out and you become into less institutional type markets, the cap rates in many cases are in the 7s to 8% range.
Right, and so you expect those to continue to decrease a little bit, even though the expectations are that we're going to continue to see, a rise in interest rates.
Until this flood of capital slows down, we don't see anything that's going to cause cap rates to rise.
Yeah, well, that's interesting. Some of the investors that we're talking to about office properties are already mentioning a rising cost of money, and I think maybe that's just natural, right, for a buyer to complain about when they're negotiating a sale. But I see what you're saying, especially when you look at some of these markets, even a secondary market like Atlanta, where some of these existing rents on these leases are 20% below market. So I guess as an investor, you're looking at plenty of upside to increase your NOI, right?
Yeah, that's what's driving the really low cap rates is the embedded rent growth. Office leases on average are 5 years long. So that means that the lease that you might have signed at a weak point in the economy will be rolling to a much higher rent. And that's really what's driving some of the low cap rates.
Yeah, we've also seen a little bit of rate shock with some of these tenants too that are into these situations, and they expect that they're going to see a little rise in their rents, and they're seeing big increases, especially if they moved up from B to A, in the down market. So, Walter, are there any markets or areas that you would say for investors that where there might be some opportunities?
Our view is the opportunity is probably between not the core space, but what we call the value add space. And that would be improving a building, moving it from higher quality, upgrading a building. What we see is in the capital markets, people really dislike risk. And to the extent that you can remove risk from a building by upgrading it to a higher quality, increasing its occupancy, you can also get a gain in value. And that's probably the best place right now for opportunities. We also see some opportunities in the smaller markets, principally because they haven't been priced up nearly as much as some of the top markets have been.
Right, those are good tips. So what would be some example, maybe smaller markets to consider?
Well, actually, Atlanta actually comes in fairly well in that many of the markets in Florida and many of the markets in Southern California also come in pretty well. Phoenix shows up well. Those are the principal markets that show a lot of upside at this point.
All right, well, good tips, and you heard it here on the Commercial Real Estate Show. Walter, thanks for joining us. As always, great information. Thank you, sir.
Thank you.
Well, thank you. If you want more information from Walter Page, visit CoStar.com. They have information on all the sectors. Well, stay with us. We're going to have more on the U.S. office market with some more strategies and tips. Stay tuned. I'm Michael Bull. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.